Hi, and welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. And so I thought today I'd do something a little unique. A lot of times when I'm talking to my subscribers, I will discuss, I'll use golf analogies. And so today I want to talk about some of the parallels to both golf and trading, and I think there's some things we can learn from this. My son is actually a professional golfer. He just turned pro and moved down to Florida to try and make it on the mini tours, and it's a tough endeavor, and I think it's two of the hardest things to try and do, I think, is make it on the professional golf tour as well as try and trade. And I see so many similarities that I thought it was worth just spending a few minutes during a lesson going through this. So I'm going to cover a few things like putting it in the fairway and how that applies to trading, as well as one shot at a time, and then evaluating at the end of the round rather than during a round, and then also having consistent and disciplined routines. So I'm going to touch on each one of these points, and then we're going to go through the stocks that came through. Before I get into that, my services can be found at rabilstockresearch.com. So I've been providing consulting work to institutions and portfolio managers for the past 30 years, but in the last few years, I've sort of changed the way I provide the research, and it's allowed me to change my rates and make it a little bit more affordable. So if you're interested as a professional, you want to start chatting and or contacting me, just go ahead and reach out. My contact information is listed. Also, the individual package, you can subscribe to that with a discounted rate. If you use the coupon code StockTalk, you can plug that in and get the first 2 months for $50. I send out about 2 to 3 reports each week, trying to identify attractive patterns, as well as talk about the market and individual sectors. Let's go ahead and start this lesson. So in terms of putting it in the fairway, what I'm trying to say here is when you're playing golf, sometimes you just can't hit your driver, and you're spending all your time in the woods because you just can't hit it straight and hit it in the fairway. And so sometimes it's just better to pick a different club and hit something that you have a lot of confidence in, even if it's a 7-iron. If you have to go down to a 7-iron, at least put something in the fairway so you can start playing the game, keeping the ball in front of you, and just I think it's a lot more enjoyable than spending your time looking for the ball in the woods. When it comes to stocks, what I'm saying here, and I'm going to give you an example, when the market gets a little bit more difficult, or you personally are just having a little bit of a period where you're not seeing or not clear, what I do in this situation for me, if things aren't clear to me, is I start focusing in on this one line. Now, this can happen in any time frame, and when I was doing a lot of short-term trading, I might have been on a 15-minute chart or something like that intraday, watching the slope of this line. And if this 18 MA, and this is a weekly chart of BLK, but if this 18 MA is not rising, or if I want to short, if it's not falling, it's a no trade. There's nothing I can do in the instance if this is not showing me slope. Now, there's a couple other filters you can use. Sometimes I like to use this 40 in conjunction with that and make sure they're looking parallel. I also like to see the MACD confirming, making sure price is making higher highs and higher lows, and that the MACD is confirming and the ADX is making peaks above 25. If you start to do that and you say, okay, I'm only going to take a trade where the 18 is rising and I've got clear slope in place, I'm making higher highs and higher lows, I've got MACD confirmation on the last peak, and I've got an ADX peak above 25, and then look for the next pullback. Now, if you start to screen this way and do that, you're going to have to be very selective, and you're going to pass up on a lot of other opportunities. But it's similar to putting in, if you want to put something in the fairway, you got to stay focused on maybe your go-to trade. You got to have a go-to pattern, something that you feel very, very confident in through thick and thin. And it doesn't mean you're going to be right 100%, but it's a high degree of accuracy, and you feel confident. It gets to get yourself back on track. In terms of one shot at a time, What I'm talking about here is, and we see this a lot in golf, especially if you watch golf on TV, they'll talk about this. And what we're trying to do is be more focused on the process of hitting a good shot rather than worrying about your score. A lot of guys that are playing golf, they're worried about what the other guy's doing. They're worried about what they did on the last hole, or they're worried about what their score is going to be. Instead of just getting down in front of the ball, trying to hit the best shot you can do, and then go find the ball and do it again. And when it comes to trading, you need to be able to do this exact same process. You have to go through your process one shot at a time. Take one trade and do a very good job. Don't worry about the money. And if the money is an issue for you and you're worried about the money and you can't follow your trade and your trading plan because you're worried about the money, then you need to reduce your position size to a point that you can comfortably follow your trading plan. And if you can follow your trading plan comfortably over time, you will be able to build up your size. But if you can't follow your plan because you're too much worried about the money, you can't give your trade enough room because you're not giving it to your stop because you're a little bit too worried about losing the money, then you need to reduce your size until you don't have to worry about that. In terms of evaluating at the end of the round, what I'm talking about here, and when it comes to golf, you don't want to make an adjustment during a round. You play with what you've got. You take your shots the best you can, hit the best you can, and at the end of the round, you evaluate what parts of your game need work. And when it comes to the stock market, what I want you to do is take 20 to 25 trades. Take a 20 to 25 trade sequence. You follow your plan through thick and thin and see how you do. Don't make adjustments inter-trade. Don't make adjustments after a couple bad trades and start, looking for another indicator or something like that. Follow your plan and use it for 20 to 25 trades and then tweak your plan from there. Don't just scrap it and start over. So that would be my suggestion there is try and give it 20 to 25 trades. I think if you do that, you have a much better chance of being successful and also evaluating a legitimate method that you're trying to apply. Finally, consistent and disciplined routines. Essentially, if you watch golf on TV again and watch these pros, they definitely have a routine they go through before each shot. And I think what I'm talking about when it comes to your trading, I would say you need to evaluate how much time you have during the course of a week to apply to the market. And then have a really consistent routine in terms of how you go about evaluating what's taking place. Make sure if you only have time to look at a certain amount of stocks, then you use that amount of stocks, but you go through them consistently. During the course of a week, you look at the same charts and the same indicators. You go through the market indicators the same way each week and be as consistent as you can about that. And then when it comes to the discipline part of taking a trade, it's as I said before, you need to do enough trades. If you can go through a 20 to 25 trade sequence and follow your plan and not make adjustments inter-trade and not jump the gun and not do little things that are hurting your trading. They might not hurt any one specific trade, but over the course of time they're going to hurt you. Then I think if you can make it through a period like that, then you've really made a lot of progress. So those are the types of things I think I'd like to see you start to applying. So anyway, I thought this was a good little lesson to be able to apply these two things or at least relate these two things in golf and trading. Let's go ahead and do some analysis on the individual stocks that came through. Okay, so another wild day in the market, but I've got BlackRock up here. I would like to go through that and look at it in detail right now. So as I mentioned, this 18 was rising and so was the 40, and now they've both flattened out. Basically, no trend here on the weekly as they're flat. Now, this is actually getting a little oversold, below, and we are coming into the 18-month line. My problem is the way it did it. Look at the ADX on the daily chart. And again, this is why I like using multiple time frames. We've got this drop to the downside showing the momentum of this pullback on the monthly. So we got a 1 bar pullback. It's hard to tell. You can see it's a big red bar. But when you look at it on an ADX basis on the daily, it tells us crystal clear that's pretty strong selling, and that this probably is going to need a little bit of time to stabilize. So I wouldn't just buy this right at the 18-month. I would make this stabilize a little bit, see if the MACD can hold the zero line on the weekly. LOW. So we've got a pullback to support here. And what I'm noticing is the 18 and the 40 are still rising, and we have pretty good price support. When last time this moved up, it had a nice reading, big strong reading to the upside. Now, because it's below the 18, I think, and let me just zero in on this a little bit. I think we need to be careful. If this can't get through the 18 and the 18 starts to flatten out or roll over, then I think we have to be accepting that this is probably going to take a little bit of time and maybe work sideways. Again, we had a little bit of selling strength to the downside, a little bit of overrun. It's possible we could just consolidate here in the near term, but I do think there's a lot of support underneath. Okay, let's look at IWM. So strong move to the downside here, and I think this is kind of an interesting chart to watch, because if it can't get back up through 208, 209, something like that, these lows down here, I'm pretty concerned about the market. I don't like the price action going on the weekly based on the momentum characteristics, and typically the market doesn't do very well when this is underperforming. So you want to keep that in mind. I really want to see this stabilize. Like yesterday, the market had a good day, but this was down. So just need to be aware of that and keep an eye on it. Okay, so Apple is in a pretty good trend on the weekly. I mean, this is the trend time frame. You see the 18 and the 40, they're rising at about the same rate. We had confirmation in MACD and confirmation in ADX, and we've pulled back to this line, and now we're moving up. Now, it was kind of a sharp pullback. I mean, the market had kind of a sharp move to the downside, and now we're trying to kind of V-bottom out of that off the daily. So what would make sense to me is this doesn't actually go back up to this high right away. It comes back and tests and does something along those lines, or maybe just tests the 18-day. But overall, this is okay as long as we stay in an uptrend on this time frame. And you could almost look at this trend line as being really important for this stock right now. Okay, so PXD is, a very strong stock. It's made a nice move here. The one thing I would watch here is we're getting extended away from the 18-month line. And if we look at how this has played out, we've had a breakout off the low, nice pullback play with a zero line reversal, and then we had a pullback to the breakout area, and we've made another move to the upside. Now, if you notice, on these last two, the ADX has not gotten back above 25. So we got to be a little bit more careful here. I'm not necessarily saying you just exit. I mean, it's very possible this is going to keep moving. But we have exceeded these highs, but we have a little bit of a problem up here at the prior peak, which is, right around 230 or so. So we're getting extended. We're starting to lose a little momentum on the weekly. If you want to be patient with this and look at it from a longer term standpoint, I don't have any problem with that. But in the short term, it looks to me like, I'd be questioning certainly doing any new buying at this point based on what I'm seeing in that ADX on the weekly. WFC has another breakout pattern here developing. Now, I want to talk about this for a minute because we've got, we've been trending to the upside and the ADX was doing fine. But then if you notice on this last breakout, we've got green DI moving, but we still haven't gotten back above 25. Now that is not an automatic sell signal for me, okay? I don't just sell because any indicator is not confirming. But what I like to do is when I know that's happening, I want to go down to the smaller time frame. And if you notice on this leg, we actually got confirmation on the ADX. So as long as ADX keeps confirming on this time frame, I'm okay to give this a chance to keep going. If this fails and we lose, so let's say this goes to another new high and we don't get real confirmation in an ADX basis on this time frame, and this never got above 25, then that becomes a lot more meaningful to me. Hopefully that makes sense to you, but we always want to use our time frames, and you always go with the smaller time frame in the immediate term. So as long as that's moving to the upside, we can stay with that. We're cautious about new buying based on this, but if you're long this stock, you can stay in it as long as this is confirming. Is a real good example of how I think you should be focused on independent movers, meaning stocks that aren't really correlated to the market, at least not in their current price action. This looks nothing like the market. And I think it's one of those years where you pick a boring stock that's breaking out of an inside year. Last year it was inside of 2020. So 2021 was contained inside the 2020. So we spent a whole year kind of working sideways, and now we're breaking out above 2021. And it's a slow plotter, but all the indications look pretty good here. We got a pretty good base on the monthly, pretty nice breakout. We're starting to see green DI show up on the weekly, and good confirmation of ADX on the daily. So it might be one of those years where the market just channels sideways or jostles around or even gets hit. And a stock like this just kind of plods higher. So just kind of keep that in mind. You don't always want to play the most volatile stocks when the market's trading very volatile. In fact, when the market's kind of looking like this, I tend to look for stocks that don't look like the market. So just keep that in your mind when you're going through and looking at stocks. Okay, so when this was requested, it was before the earnings. So I'm not sure if whoever asked is still interested, but I will mention that this is coming down to finally kind of getting pretty close to support zone here around 125 or so. The problem is, look at the way it's doing it. One thing I want to mention here. So I talked about, on a few other stocks, I talked about the strength on the daily chart preventing me from looking to buy. You see the strength on this decline here? So this is not a buy area. What I was thinking might happen is it might actually evolve into an opposing trend, but it was so weak that the moving average could only come together, and we barely got a zero line reversal with low ADX. So this was actually kind of like one of my negative patterns, but just barely, because the two lines just kissed, as opposed to having the 18 cross back above the 40 here. But we still have a lot of strength to the downside. Until that subsides, I really wouldn't be interested in trying to dive in on this. Okay, so Lilly is in a consolidation pattern. Now, let's just start with the monthly chart. We had this big move to the upside, and it's been consolidating here. And I'd like to see this consolidate more. We can see we had a breakout bar up here. You see how this tried to break out? And look at what, so here's the original base, and then we had another breakout, another breakout, another breakout. And any of you O'Neill guys, you can see that this is 1, 2, 3, 4. That's the fifth level base, right? I mean, once you get to 3 or 4, you got to start questioning them. But now once you get to 5, you got to be really quick if you want to play it. So I think that's what's happening here. He broke out, and I look at the big green bar up and then big red bar down. I think this needs to consolidate back and take a breather here. It's just been going up for such a long time. So it's not like it's ferocious selling. I mean, we've got a little bit of red DI strength on the daily chart, but not the type that's showing up in terms of volume or anything. This might just need to consolidate for now, but it would prevent me from taking an interest in buying this right now, just because I think it needs time. Okay, so Amazon has had a pretty nasty little move here, and we're below the 18-month. And let me just show you this. This is crystal clear now. This is declining, okay? I mean, there were a few times where it tried to get below, it never closed below, and this line may be flattened out, but we haven't been in a position where this rolled over. Notice how the 18 got stretched away from the 40 before that happened. Notice the tails that developed on the breakout bars on the monthly chart. Okay, so those are nice tells that are telling you there were some issues developing here. And I talked about this not that long ago. But we had a pretty strong break to the downside. And again, I like to focus on especially when the volatility goes up, you kind of need to switch down a time frame. And so look at the daily ADX here. Look at how strong a move that was. So once this rallies up, you sort of expect at least a test, if not a new low, to develop. When we get strong move in ADX like that, I'm always on the lookout for another move to test either. And this is also true if it's going up. So if it goes up and ADX hits a strong reading, I'm expecting after a pullback another test or even exceeding that high. But in this case, it's on the downside, so I'm looking for a minimum of a test of that low. But just look at what's taking place. The zero line's breaking on the weekly for the first time in a long time. And again, the 18-month has rolled over. No rush on this one. Give this some room to breathe. If it wants to stabilize, that's fine. I don't like to buy right off the low. I mean, if you're interested in doing that, that's fine. Those are different types of strategies. I don't really like to talk about that on here because the fact of the matter is you're fighting the trend. And if you're fighting the trend, we've got a neutral trend on the monthly, a downtrend on the weekly, a downtrend on the daily, and it's just a hard battle when you're fighting ADX on the daily chart. So XLE has been very strong, obviously, and we continue to see pretty good action here. In today's market, it's still fine. I mean, it's actually down just a little. It is down today, but it's not really showing up as much damage to the chart or anything. I just think the only negative about this is it's getting a little overbought. If we look at this on the monthly chart, and actually, I think it's better to go through some of the big names in the XLE and figure out where the resistance is. So, like on Exxon, for example, there's some resistance up, say 81 to 83, 84, something like that. So we're coming into it's getting right up into that zone, and you can see here we're starting to get up towards 70. This is going to be a problem with resistance. So if I'm looking to play this, I probably want to look for a pullback now a little closer to the 18-week. OGE. So pretty nice looking pattern here. We've got good ADX to the upside, another energy guy. And let's just evaluate the daily. So we know the weekly looks pretty good. Now the daily has one of these patterns where it's trying to move up before these lines come together. So the person who asked this obviously has followed a lot of my stuff. So he's asking, I'm thinking of playing the pinch, and I think that's a good play. It's possible this could break out and just go, but I don't like that in this situation because we're not showing any DI, green DI or anything like that. So even if this moves up, I'd still be looking for a pinch. So it could be a pinch like here, or it might move up a little bit and then you get a pinch right about where it is right now. But I think that's the better play in this situation where the lines don't even come together. A lot of times you'll get a check back after it turns up. So that's how I would look at that. I'm switching over. I've got a different tab for the hourly because the guy was asking about daily and hourly setup. I think you could buy the breakout here. I wouldn't have a huge problem with that. Obviously, the real setup was coming up through 650 off the hourly. You had a pullback on the daily with good ADX, and then you had the zero line reversal, and you coming up through 650 was the entry. A second entry could be the breakout, but just watch the volume on that hourly as it's taking place. Make sure that you've got pretty good quality there, and if you're breaking out, and it happens in the first 5 minutes of the day. So if you get a gap up or something like that, you got to make sure it gets through 15 minutes or something, and then if it takes out the high of that first 15-minute bar, then I would consider that to be a breakout for that hourly. Let's look at AVGO. So we've got the most troubling thing about this is we had this huge move to the upside, big breakout here, makes a move, pauses here, and then big move, and then we get a huge green bar. This is the biggest bar in the move. So I'm looking to be a seller into a big bar like that after an extended run and getting extended away from the 18-month line. And then we get this big selling bar. Now we've gotten a rally off of that, but I kind of expect a range to form here. I just don't see this getting through. And one of the rules of thumb I like to use is that if this comes down like this sharply, then the midpoint is usually a good spot to be on the lookout for a turn down again. Anyway, overall pattern looks okay, but I would think this is going to channel a little bit. Okay, well, that's all the time we have today. Thanks for joining me. My contact information is listed. Feel free to reach out. And also, if you have any stock requests, send it to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.